one of the largest crypto exchanges is cutting staff again, not because of a market crash, but to prepare for something much bigger: a public stock listing. Around 150 employees at Payward, the parent company of Kraken, have been let go in the latest round of restructuring aimed at streamlining operations ahead of a potential public debut. This isn't just another round of cost-cutting, it's a calculated pivot toward Wall Street, signaling that the era of crypto-native growth at all costs may be over. Payward, which operates Kraken, confirmed the job reductions as part of an ongoing effort to build a leaner, more investor-friendly company. This latest wave follows an earlier cut of about 400 employees in late 2024, shortly after Arjun Sethi was named co-CEO. The leadership shift marked the beginning of a strategic overhaul, one focused squarely on profitability, operational efficiency, and positioning the company for public markets. According to reporting, the goal is to improve earnings before interest, taxes, and amortization, a key metric that public investors and regulators scrutinize. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The company confidentially filed a draft S-1 with the U.S. Securities and Exchange Commission in November, marking the first formal step toward what would be one of the most significant crypto exchange IPOs in years. While plans were reportedly paused in March due to weak market conditions, insiders say the ambition remains intact. At the Consensus Conference in Miami, co-CEO Arjun Sethi stated the exchange is 80% ready to go public. That number alone tells you how serious this is, not a distant dream, but a near-term operational target. The push for a Kraken IPO is no longer speculative. It's a live trajectory being shaped by executive decisions, financial engineering, and strategic acquisitions. And those acquisitions are piling up. Payward recently acquired Reap, a stablecoin-focused payments firm, for $600 million, and Bitnomial, a digital asset derivatives platform, for $555 million. These follow the $1.5 billion purchase of NinjaTrader in early 2025, which gave Kraken a major foothold in U.S. derivatives trading. Together, these moves are not just about growth, they're about diversification. The important part is not just the expansion, it's the valuation story behind it. Payward is currently raising new capital at a $20 billion valuation, a number that reflects aggressive confidence in its public future. But here's the catch: that figure doesn't tell the whole story. In April, German exchange operator Deutsche Börse bought a 1.5% stake in Payward for $200 million. That secondary transaction implied a valuation closer to $13.3 billion. The gap between $13.3 billion and $20 billion isn't just noise, it's a red flag for investors. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The Kraken SEC filing is confidential for now, meaning we don't yet know the full financial picture, governance structure, or risk disclosures that will eventually shape investor perception. The stakes are high. For Kraken users, a public listing could mean greater accountability, but also more restrictions. For employees, the message is clear: performance and efficiency are now non-negotiable. For the broader crypto market, a successful Kraken IPO could validate the entire sector's maturity, much like Coinbase's 2021 debut. But if the offering stumbles, it could chill sentiment across crypto-native firms eyeing public markets. So what comes next? The most credible signal isn't another acquisition or valuation headline. It's whether Payward resubmits its S-1 in an updated form, signaling that the IPO pause is truly lifting. Until then, every job cut, every deal, every statement from leadership is part of a single mission: to prove that Kraken isn't just surviving the crypto winter, but evolving into something Wall Street can finally trust. The Kraken IPO isn't just about going public, it's about proving crypto's next chapter will be built on discipline, not speculation. And whether that story convinces investors may depend less on price and more on patience, transparency, and time.